So in this video, we'll be looking at how to trade liquidity on the 4-hour time frame. And this is just an example of how to trade liquidity. We'll see that price is going bullish, then all of a sudden we have this breakdown. Now this is for a bearish liquidity sweep, and you can see that the recent high was broken, and there was a sweep of the recent high, and after price sweep the recent high where liquidity was, we can see that at this point we now have a market structure shift. So at this section, market broke the recent low, and so we have that breaker block, or we call it a market structure shift. Now at this point, when we have this market structure shift, we'll be trying to look at what may likely happen when we have this market structure shift. So we expect price to come up to this area where we had that breaker block before price continue to trend lower. So this is basically what we are trying to explain at this level, because this level where there is a breaker is an important level that if price wants to go lower, there will be a rebalancing of price at that level before the breakdown. So we labeled that our breaker block, and that area will become our area of interest or our entry on the lower time frame. So once you see this liquidity sweep, you also expect that your take profit, if you are somebody that used to take a one to three risk to reward, at this point you can have a provision for larger take profits, because you know that liquidity have been swept, and it is a catalyst for price to continue to go in the direction of the trade that you predict, so you can take a larger take profit. So we are looking at this live chart now. This is a BTC USDT chart on the 4-hour time frame. Now if you look at this chart, we are bearish already, and you can help me subscribe to my channel, get me to 1,000 subscribers. So we can see that at this zone we already have this area of interest, which is like an order block when price began to move higher. So we want to look at that area, that even if price will not break that level, price will get to that level. So that area will become our area of take profit. And so we can see that the recent high of that bullish green candle was taken by this bearish candle. So we know that there's a liquidity sweep. So price took the high, and then price closed within the range. So we can see that that liquidity sweep is already a catalyst to tell us that price may go lower, at least reaching this area of our order block. So now what we'll be expecting now is that price will move in this way. Price will move in this motion before hitting our order block. So once we already have this sentiment, it is now important that we look at that area as our take profit. And though we have that area as our take profit, we would like to go to the lower time frame, because the lower time frame is already where, let me label this area as our order block. I didn't write it out. So that is our OB, which means order block. So when we have this already set up, it is important for us to now go to our lower time frame, because once you are trading the 4-hour candle, your lower time frame will be the 15 minutes for your entries. So we go to our 15 minutes time frame, and once we come to our 15-minute time frame, let's see how the chart looks. So we are on the 15-minute time frame. So let me just adjust the chart so that it is clear to you. And so it's obvious that we are in a bearish structure, and so we have our 15 minutes time frame here. So now that we have this graphical representation of our chart on the 15-minute time frame, what are we looking at? So we can see that price was bullish till it hit that area where liquidity was swept, and then there was a bearish shift. So now that we're on the 15 minutes time frame, we will also want to mark out our area where we had the breaker. Now, that was the last low before price broke down. Now, if you remember the image I showed you when we started this video, so now we have the breakdown, and we can see that price is already retesting the area of the breaker block. So price is already retesting the area where we said we'll have our market structure shift. So now that area becomes our area of interest, while the other block becomes our area of take profit. So we are shorting this market, and we are taking it right from our breaker block, putting our stop loss on the recent high. So our stop loss will be on this recent high, because if you look at this structure, it's more like a swing. Then we have our take profits at the other block. Now, I told you that when there's a liquidity sweep, we have a catalyst that pushes price in the direction of our trade, so we can target a larger amount of profit rather than our usual 1 to 3 risk to reward. So this is already a 1 to 7 risk to reward. So if this trade goes in our direction, we'll be getting 7 times the amount we want to risk. So we see how this trade will move. So we can see that the price is already moving in the direction of our trade. You see, price didn't go any higher because that area of breaker block, the area where the breaker block is, was very important. And you see that in less than 5 to 6 hours, our take profits was hit. So guys, this is more like a graphical representation of what it is. Check your charts, trade this strategy, and tell me how you feel about it on the comment section. I will appreciate your feedback. So thank you guys. Like, share, and subscribe to this channel, and thanks for watching.